Let's get oriented. I'm Lázaro Ulloa, owner and founder of Ulloa Financial, and this is your Market Compass week ahead for Monday, March 23rd, 2026. This morning, the market is no longer dealing with just one story. It's balancing inflation risk, energy pressure, and policy uncertainty all at the same time. And that shift is settling the tone for the week. Last week was less about what the Fed did and more about what the market now has to manage. The Federal Reserve held rates steady after its March meeting, and its latest projection showed 2026 PCE inflation at 2.7%, with the median federal fund rate ending 2026 at 3.4%. That tells us that the Fed is still patient, not urgent. But the change came from energy. Rising geopolitical tensions pushed oil higher, and that quickly shifted the market conversation from rate cuts to renewed inflation pressure. This is no longer just a rate story, it's an inflation risk story again. As that shift took hold, markets responded quickly. Stocks weakened, bonds came under pressure, and expectations for rate cuts began to pull back. This is the adjustment now underway. The market is not panicking, but it is reassessing what higher energy prices could mean for inflation, margins, and Fed flexibility. That brings us back to the Fed. The central bank did not sound ready to rush with its easier policy. The projections still point to moderation over time, but not the kind of fast easing that markets often hope for during volatility. So now the market is caught between two competing forces: a still resilient economy on one side and a renewed inflation threat on the other. That's not an easy setup for stocks. This is the hinge point for the week. Oil is no longer a side story. Oil is now central to the macro narrative. When oil surges, the market has to consider whether inflation expectations begin rising again and whether that leaves the Fed with less room to respond if growth slows. This is why this chart matters. It's not just a commodity move, it is a pressure point for the entire market. Now we look ahead. This week gives us several important checkpoints. On Tuesday, flash US PMI data will offer a timely read on business activity and whether companies are still holding up under higher costs and uncertainty. S&P Global's calendar shows the US flash PMI release on March 24th. Also on Tuesday, consumer confidence will tell us whether higher gasoline prices and geopolitical stress are starting to affect the consumer outlook. The conference board publishes that report at 10 a.m. Eastern. On Thursday, jobless claims remain important because the labor market has been one of the main pillars of economic stability. And on Friday, the final Michigan sentiment reading will matter because the preliminary March reading slipped to 55.5, while one-year inflation expectations stalled at 3.4%. That is exactly the kind of combination the Fed does not want to see get worse. There's also one important wildcard this week. If Tuesday's PMI data comes in meaningfully weaker than expected, the market may begin shifting its focus away from oil-driven inflation pressure and towards possible cooling and growth. That would not remove the risk, but it could change the narrative quickly. I'm also watching market leadership very closely. If strength stays concentrated in energy and defensive groups, while growth sectors and small caps remain under pressure, that tells you that this market is still leaning toward protection and not confidence. Broader participation would be healthier. Narrow leadership is a warning sign. It tells us the market is moving, but not with a strong foundation underneath it. So here's the takeaway. The market is trying to determine whether this is a temporary energy shock or the beginning of a broader inflation reset. But there's also a wild card. If this week's data, especially PMI, points to a meaningful cooling in growth, the market could begin shifting its focus again. That's why this week matters. For the long-term investor, this is not a moment for knee-jerk reactions. It's a moment to make sure your portfolio is built for higher for longer inflation backdrop while still staying prepared if the growth story starts to soften. So watch oil, Watch yields, watch participation, and watch whether the data confirms pressure or changes the narrative. Stay oriented, my friends, and elevate your legacy.